Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I was just doing a research based on some of the companies that I own in my portfolio. Recently, a couple of companies came out, they announced they acquired other businesses and so on. So I just wanted to look at their financials to see if they can afford to actually add these companies to their portfolio, if they have the money, if they're going to go into debt. So I was just doing the research and trying to find out. And this is the difficult part, by the way, of having 20, 30 different companies in your portfolio. And obviously, stock picking is not easy. I do love it and I enjoy it. But one of the things that you constantly have to do is basically do a little bit of research about the companies that you own. And the two companies that I'm going to talk about today both have recently announced that they are they're acquiring new companies. And this is a normal thing. A lot of companies do this to grow their business. So they find it like in a new competitor or new company that could potentially be a great addition to their portfolio. They then buy these companies and that helps them to create more revenue and take these companies out of basically take the competition out and increase your revenue. Basically, that's one of the reasons they do it. So what I want to see is, do these companies have the financials to be able to actually buy these companies? And the answer might be yes or no. So I was doing the research and I thought, you know what, this is actually interesting. It might be a good, I was not planning to do this video. This is not like a planned one. I literally did the research and I thought maybe just share it with everybody else. So it might be a little bit messy. But I'm going to share it with you and then I'm going to wrap it up just to kind of explain to you what is in my head and where I'm going with this. Okay. So let's get started. But before we do that, please give the video a like. It only takes 3 seconds, okay, maybe 2 seconds, 1 second, but really helps the channel. Okay, so please, if you can do that, that will be really appreciated. So the two companies that I'm looking at today, the first one we're looking at actually is Adobe. Adobe just announced their earnings just yesterday, and they are up quite a bit, I think, today. I think about 4 or 5%, which is really nice to see. So let me quickly show you. Adobe is a company that I own in my portfolio. Right now, I'm down a little bit, but as you can see, it's 4% up today, and that's probably the highest they've been up in for a while. The earnings actually looked good, so I'm going to share that with you, and then I'm going to tell you what is going on with this company. So they recently announced that they're buying a company called Figma. So I'm going to talk about that in a second, but just to give you the highlights of the current earnings report that they've just released. This is basically the guidance for the 2023 targets. So they are targeting total revenue of 19.1 billion to 19.3 billion. Wall Street basically were kind of expecting about 19.27, which is basically about 10% growth for the next year. And then the year after about 21.67, which will be about 12.5% growth. So that's basically it. The rest of it is basically gives you a breakdown of each different segment of their business and how much they will earn. And obviously their earnings per share as well, basically being 15.15, okay, 15.15 to 15.45 the next year. So those are what the company is expecting. Okay, and what Wall Street is expecting is this for that as well. So it's very similar, more or less around the same amount. So we'll see how that goes. And this is why a lot of companies come out with their earnings, and then if they miss it, if they miss this basically, or if they miss what Wall Street was expecting, that's when they go down and so on. So what I want to show you today is there's a lot of information in there. You can go to their website, by the way. If you go to their website, investor relations section, you can find the latest earnings report. So on. This is a very good. If you haven't done this kind of thing, please do it because it really helps you. It really helps you to understand their business. They give you a lot of written basic work on whatever the company is thinking, why they think this is that, and blah, blah, blah. So there's a lot of information in there. But the 3 sections I'm going to look at, the first one is the income. And then we'll look at the assets and liabilities, and then we'll look at the cash flow. So this company basically reported just their last quarter of the year. And they also have, so there are 2 things going on here. The first one is the year end. So 2021, December of 2021 to 2022. So that's the full year. And then you got last 3 months, basically just last quarter. So we'll just look at the last quarter, and you can have a look at that as well if you want to pause the video and just look at that. So 3 months ended December the 2nd. The total revenue was $4.5 billion. So that's the total revenue. This time last year, okay, they made 4.1 billion. So that's an increase, absolutely. Now, this is one of the reasons I absolutely love about this business. They made total revenue of $4.5 billion, but the cost of that revenue was only 568 million. That's ridiculous. That's a gross profit of almost $4 billion, which is absolutely amazing when you think about it. So this software as a subscription kind of model, it's absolutely beautiful because they're not packaging anything. They just develop the software, make it beautiful, upload it to some cloud. Then you got to pay, click the link, it downloads it, download the Creative Cloud Suite, and then all of a sudden the software is in your computer. That's it. It takes a couple of clicks to download it. So yeah, so that is basically there in terms of their revenue. So in total cost of that revenue is very, very slow and very small. Sorry. Total operating expenses was $2.4 billion after they've, based on research development, sales and marketing, general administration. After they paid for all of these things, okay, what's left was $1.5 billion, okay, of the operating income, which is something I look at because you want to see how much the company is spending on research and development and the other things that the company spends money on. Okay, and as you can see from year to year, you can also see from 8.1 to right now 9.3. So it is absolutely fine. It is heading the right directions from 5.8 to right now 6. So it's not a lot, but it is an increase. And the same goes from basically this time last year to where it is right now. Okay, and then if you want to see then basically the bottom line, okay, so this is your bottom line here is your net income, $1.176 billion. Which is absolutely fine, beautiful, because after they paid all their expenses, that's the money they taken home that they can do share buybacks and all of the other things they want to do with that money. The other thing I want to share with you is the current assets. So when you look at the December 2021 to December 2022, you can see from 3.8 to right now 4.2. By the way, if you ever want to calculate the cash and cash equivalents, so when you're doing the interest bearing securities, because you need the cash and cash equivalents, you can use this from here. So this divided by the market cap will give you a number times by 100. That will give you the equivalent of either 30%, 33%, whatever you're comfortable with. If it's more than that, then obviously the company becomes non-Sharia compliant. But this is one way to find it. So if you're looking for it, go to the balance sheet, go to the cash and cash equivalents and find out what that is. Okay, find out what the market cap is, divide the two, and then whatever you get times by 100. So the current assets actually looks good. So from 8.6 to right now 8.9. And when you look at their current liabilities, current liability basically 6.7 to right now 8.1. So they do have more assets than actually liabilities. And you can also look at the total liabilities and so on. You could also look at the total debt from 4.1 to right now $3.6 billion. So that's very basically important to look at as well. So the other thing I want to talk about and show you is the free cash flow for this company. Okay, right now the Adobe has about $7 billion of free cash flow. Now this leads me to what I wanted to talk about, okay, which was basically the fact that this company has recently purchased in the process of actually adding this company to their portfolio. So the company they acquired is called Figma, and as soon as basically it is for $20 billion. They only have $7 billion in cash. They're acquiring this business for $20 billion, and they said $20 billion in cash and stock. So they will be using some of the cash and some stock to buy this. Okay, so this company has a couple of options. Okay, the first one is to use their own cash if they have it. Secondly is to get a debt from the bank. And right now, because of what interest rate is and the fact that it's increasing every single quarter, it is not ideal for these companies to borrow that basically money from the bank because it's going to cost them a lot, right? And then the final thing these companies will do, which possibly Adobe is going to do, is issue more shares. So they are going to dilute our shares that we own already. As you can see, shares outstanding for this company has declined over the last 10 basically years. But it looks like they probably will end up diluting our shares, use some of the cash they have, okay, and that will be enough to finance this bit deal. Now, I don't have a big problem with that, because if the company they're acquiring is going to add to their revenue, okay, massively in the next few years, they can get that money back quickly. And hopefully, because this company has actually been buying their own shares, so repurchase of common stocks is quite common in this business, okay, if you like. So they do buy quite a bit of their business back every single year. And if they're doing that, and that's in the balance sheet, hopefully they can then carry on doing that once the company is actually integrated into their business and they start making profit and so on. So right now, as we basically speak, Adobe will be in my portfolio. I'm comfortable to hold it. I don't think their debt levels is not too much. It's not going to go into non-Sharia compliant anytime soon, because the market cap is huge and the debt levels is not that much. Okay, so that's why I'm still comfortable holding on to this business, and I look forward to when this company goes green, because right now the factor is about 4% up today. Hopefully in the next few months, because the sentiment has changed, especially for the company, the overall market is still down. We might be down, I don't know, by the end of this month, the S&P 500 for the year might be down, I don't know, at least 20% or whatever it is. Because right now, I think we're looking about 18%, 19%. So over 20% by the end of the year, and that's a massive loss. But when it comes to Adobe, the sentiment has changed because of these really good earnings and the fact that their guidance actually looks decent enough. So let's see how this Figma deal goes. But for now, I'm planning to hold on to this. And that is the one thing I want to share with you guys, to see if this company has actually enough cash and share buy. Hopefully, if they issue more shares, hopefully they can buy back those shares when the company is part of their overall long-term revenue, if you like. Well, the second company is slightly different, and this is Amgen. Amgen recently announced they are going to basically purchase a company, I think it was a couple of days ago, called Horizon Therapeutics, and that is $26.5 billion deal. And this is the one that worries me the most. This is the one we need to talk about, okay? As you see, this company has actually been up 17.5%. And when you look at my portfolio, you can see I'm up about 35% right now. I've had this company for about 2 years now in this portfolio. I started buying when it was actually undervalued, when it has the debt level was not as high as it is right now. So what we need to do is exactly do the same thing we just did with Adobe. So if you go to their presentations, okay, you would be able to see there's loads of things in here. Amgen Investor Presentation December, that's the one that they've just released, and this is what it looks like. So you got a lot of fancy information in there. Things are going up, things are going down, what they're doing. So this is like their selling point, but this is not the one I'm interested. The one I'm interested is the most boring one most people run away from, okay, and that is the one, basically this balance sheet here. So we need to look at this. We need to look at the revenue, how much basically debt this company has, and how much cash flow this company has, and see if they can avoid to actually buy this company, right? So as you can see here, the total revenue for this, so again, it's 3 months we're looking at, okay? The 9 month, you can look at that because this company just reported their third quarter, Q3 basically. They could still have Q4 to go. That's why it's 9 months. So Q3, you're looking at about from 6.7 this time last year to right now 6.6. So it's a slight decline in terms of revenue. Nothing to worry about too much there. In terms of total operating expenses, again, just below $4 billion, and then total operating income is $2.6 billion, okay? And this time last year it was 2.3, so there's an increase there somewhere, okay? And then the other final thing I want to show you here is the net income of from 1.8 to right now $2.1 billion. Then we're looking at the assets, and as you can see here, from this time last year, they had $8 billion of cash and cash equivalents and marketable securities. Right now we're looking about almost 11.5. Now this could be free cash. Also they might have CDs and things like that with the bank and bonds. So these are basically assets that they can liquidate very quickly if they need to. So they might own some bonds, and instead of the money sitting in the bank, okay, they might get some basically bonds, and then that cash is used as soon as the company decides to use it, whatever, for whatever reason. Okay, so that's why they have $11.5 billion that they can liquidate easily. When you look at their total current assets, you're looking at, by the way, this is current assets only, but it's not the total assets. Total assets is 63.7, but current is $24 billion. Okay, same thing again, like in terms of total liabilities. Okay, we're looking at 63.7, which is almost identical to basically their total liabilities, which is a bit scary. Okay, because if now the liabilities becomes a little bit more, the company can get into all sorts of things. And then you've got one thing you've got here is a long-term debt of $37.1 billion, from $33 billion to $37 billion. So they have a quite big debt in here. Now, this is one of the reasons when you look at right now Zoya, this company will be basically Sharia compliant, because their current market cap, so this divided by the current market cap times by 100 will give you, I think, about 31 or whatever it was. Okay, but the current market cap right now, if you actually go on Yahoo Finance and look at the current market cap and divide it by this, basically it's way less. I think it's about 25%, so 25% Sharia compliant. So there's nothing to worry about as we speak right now. Okay, but this worries me a little bit. That's a quite big debt. And not only that, the fact that they're now acquiring a new business adding to their portfolio, that kind of worries me a little bit as well. So overall, this company has almost $9 billion of cash. Remember, they're buying this company for $20 billion, $26.4 billion. So that's the plan. And when you look at their basically debt right now, is 38.7, which we've just seen on their balance sheet. Now, if they have only $8 billion in free cash flow, and they already have this much debt, where is the money gonna come from? So my main concern for this company is they can't go back and get more debt, because then that is gonna tip them basically the Sharia compliance side of things for me anyway, right? So that's getting more debt. Now, to finance that debt is gonna cost a lot of money to this company. Now, what is the alternative? The alternative is probably to then issue more shares. They have been buying back their own shares, but is that even enough to actually buy this company, to add to this portfolio? Sorry, so is this even enough to cover the cost of buying this business? And the fact is, they are planning to pay in cash. Okay, so they're buying basically each share of this company, whatever, in cash for basically they're gonna end up paying for in cash. So the only alternative is to actually issue more shares. Okay, if they can issue more shares, I actually would be happier for them to issue more shares than actually get into more debt. Now, I have two options. Okay, either wait and see what happens. Okay, or take that £570 or whatever I've got right now and use that money basically of profits, and use this money, 2,200 whatever pounds, for something else, because I'm really worried about the debt level of this business. Okay, and if they're going to pay in cash, that means, are they going to issue more shares, or are they going to go back to the bank? If they go back to the bank, then that means they're going to get into more debt, which then means definitely they're not going to be compliant anymore. Okay, then I have to sell it. So right now, out of the two companies, this looks like a sell for me. I'll be honest with you. I'm going to wait and keep an eye on the situation in the next couple of days. I want to see how I feel about it. But right now, I'm leaning towards selling this. Take this free cash, basically take this cash and invest it in another business. But with Adobe, the fact that their debt level is almost nothing, I'm happy to keep this one in my portfolio. Even if they go to the bank and get more money from the bank, that should be okay, because the only issue is they're going to have to obviously pay it with a lot more interest, because the interest rate is very high and it's going up. It's not ideal to actually borrow that money from the bank, but at the same time, it might be a better decision for this company because they have a low debt level instead of issuing shares. If they issue shares, which is absolutely fine, then hopefully in the next couple of years, once the company integrated into their revenue, they can use portion of that revenue to buy back their own shares. I'm cool with that. Okay, but with Amgen's situation, because of their starting debt levels, that's one of the reasons I do not feel comfortable holding on to this business, knowing that I'm up quite a bit. I can take that money and put it into another business and then move on from there. And if the company actually does well and basically finances their debt and not get into more debt, then hopefully then maybe I can buy back after a while or whatever. So that's my thoughts. I told you it's going to be a little bit all over the place, but I just wanted to share with you what I normally tend to do in these kind of situations. Because remember, every single stock you own here in this portfolio has a different story. And you need to know this story. If you don't know this story, then what's the point of buying these companies? Genuinely. If you own 20 stocks, you should know this story. You should know where they're heading. You should know what they're buying. Basically, what are they acquiring? Who is the... Like, for example, Broadcom, we talked about recently, they acquired VMware. Okay. What are they going to do? Probably issue more shares. Are they going to use their bit of their what is it called, free cash flow and so on? So you need to know the ins and outs of every single company you own. It can be time consuming. That's why some people will be better off at basically adding all their money into an ETF that tracks quite a lot of these stocks in like 200 300 stocks in one portfolio, if you like, instead of just owning individual stocks. But I do enjoy this kind of thing. I like it. I learn a lot from it. So that side of things. So I hope you're enjoying this kind of videos. I hope you enjoyed transparency. Sorry to make this video so long, but I just want to share with you guys what's in my mind right now, what I'm going through. And like I said, Adobe, I do like it. Amgen right now, I'm basically putting a question mark next to it. I might be able to sell it and then use that money to actually finance or add it to something else that I think I have a bullish thesis, if you like. Anyway, have a wonderful day. Assalamu alaikum.